So I thought it might be a good way to start to have you introduce yourself to
Sure.
to the Fortune community, to the business community. You are. I think I hate to start with someone's age, but I think it's relevant. You've been with Wells Fargo.
57. It's
57,
okay,
and
yeah.
you've been with Wells Fargo.
That's
since,
young these days.
Oh yeah, you're very young. It's 57.
Want to go out and run?
Is the new what is it? You've been with Wells Fargo since 1987. Tell everybody a little bit about your career path up until becoming chief executive last fall.
Yeah, so my wife and I moved out from Chicago to Los Angeles. We thought we were both native Midwesterners. Thought we'd be there for a couple years because everybody from the Midwest thinks everybody in Southern California is crazy, and they're right.
Yeah, I was gonna add that.
And no, that's right.
Yeah.
And I found a great place to work, which was Wells Fargo. That's why I moved out there for a job. And I've been in a variety of different areas within the company. I've been in the workout business. I've been on the credit side. I've started some new businesses. I've been involved in a number of acquisitions and divestitures that we've done. Introduced a number of new products. We're going to talk about one today. And then also got involved in being the chief administrative officer, so running a number of the enterprise functions. So I've done almost every job at the company. None of them well, but enough to become the CEO.
Well, that's a humble Midwestern statement, but we'll come back to the circumstances of your becoming CEO, which is on everybody's mind and is a very important topic. But you're gracious enough to come to a technology conference, and we're going to talk about technology. But first, I just want to make the observation. You didn't mention anything being in this very big retail business that Wells Fargo has, and so I think you didn't work in that part of the business ever. Is that correct?
Well, I actually started out in banking before I worked at Wells Fargo as a teller in the summer. I worked for Savings and Loan in Michigan, and then as I was going to the University of Michigan, I worked my way through school by continuing to work on the retail side of that Savings and Loan. So know enough just to be dangerous in the business.
But not at Wells Fargo. And just for people who aren't in banking, when people in banking say retail, that's when people when we go to the bank and go to a teller, that's the retail. Versus the commercial banking, which is where you spent your career.
Yeah, though we define it today as not just, and we're going to talk about technology, it's not just going into one of our branches. It's using an ATM, it's using us via mobile, it's calling one of our bankers on the phone, or being using your laptop.
Good. You want to talk about innovation. Wells Fargo, I'm a Wells Fargo customer. I have been for 20 years.
Yeah, thank you.
And as I told you when we first met, Wells Fargo had a very good website before most other banks had even bad websites. This isn't new for you. Talk about how you think about technology and innovation and what you're trying to do now.
Sure. So let me start back at 1852.
All right. I get it. I know where you're going with this.
Well, the reason is when you think about what our business was in 1852 when we were founded, we delivered people and packages by horse. How does that company become one of the largest, most successful, notwithstanding some of the issues that we've had over the last year, which I'm looking forward to talking about.
Yeah, I'm sure.
How does that company become the Wells Fargo of today? It becomes the Wells Fargo of today by innovating. We've been innovating for 165 years. In terms of our customer interactions and the consumer interactions that you're referring to, we were the first bank in the mid-90s that really rolled out online banking. And it's interesting for me today because I hear a lot, and there's many great disruptors that are in this audience. We're a disruptor, right? We introduced online banking. We were the first bank over in the last couple of months to introduce a cardless access to all of our 13,000 ATMs, to every one of them. And I could go on and on. But the point is that we look at technology as an incredibly important part of our business today. We had 1.9 billion consumer interactions in the second quarter. 75% of those were by mobile. Having said that, 51 million times a month, somebody comes into one of our branches.
This is a business audience, so go ahead and go deep for a moment on how you've structured the business recently around this topic of innovation.
So we've made two very important organizational changes over the last couple of years. One is that while we've been very innovative for our history, we were doing it on very much a siloed basis. So a couple of years ago, we brought all of our innovation activities together in one place. And what's great about that is it allows us to be more efficient and effective in terms of how we're investing our money, but also it provides a more uniform customer experience, so you don't have technologies that are built product by product. It's really with a consumer focus. So that's number one. Number two, in October of last year, soon after I became CEO, we formed a payments group. When our customers think about, consumer customers in particular, think about Wells Fargo, they don't think about us on a product basis. They think about, well, Wells Fargo provides my checking account. Wells Fargo allows me to get money out of an ATM. It allows me to move money by mobile, use a debit card, use a credit card. If that's how they think about us, why don't we put all those areas in one place? And we did that. We combined that with our virtual channels group. And so that we've got mobile and online and the phone, all of our phone bankers connected with that group, and then we put innovation in that same place. And it's really helping us accelerate introducing new technologies to our customers.
So keep going with payments and tell everybody what new you have, the thing you have that's new today.
So one of the things that we're very excited about is a new product that we're announcing today called Control Tower. When you think about our customers, or any of you, even if you're not one of our customers, you've put your payments information in a lot of different places. You pay for the gym, you buy a movie, it's everywhere. And then what happens when you want to make a change to that credit card or debit card? You say to yourself, where in the heck have I put everything? Why not put all that in one place? That's one of the things that Control Tower is going to do. When you're traveling, you want to turn on and off a card. How do you do that? That's going to go in Control Tower. Many of our customers are sharing their financial data with a number of different providers outside of their bank. We frequently get calls from our customers saying, I didn't know I did that. Well, they just forgot, right? That's understandable. Why not put all of the places that our customers are sharing their financial data in one place? And that's Control Tower.
Who are some examples of those institutions that you've already signed up to? Because they need to be signed up, right? Like in an API fashion, I assume?
Yeah, that's right. This product is going to be rolled out in stages because some of the data that we're going to need to really make this a terrific experience for our consumers is somewhere else, so we've got to put APIs in place. But Intuit, Xero, things like places like that would be perfect examples.
When I think of this is a although we're in Aspen, we'll call this a Silicon Valley crowd. When I think about payments, I think about Stripe, I think about Venmo, I think about PayPal, I think about a European company, Adyen. I don't necessarily think about the big banks. You think I should, correct?
Well, I think you should, because first, all those the companies you just mentioned are good customers of Wells Fargo. They rely upon us to be successful in their business. So some days they're our best customers, but at the same day they're also competitors. That's fine. We've been doing that forever. One of the other exciting products that the banking industry has gotten together to roll out is Zelle, where if you're a Wells Fargo customer and you want to send money to a Chase customer, now all you need is their mobile phone number or their email, and you can send it under $500. It's free and it's real time.
I looked this up because I didn't know how to spell Zelle. It's spelled Z-E-L-L-E. Show of hands for how many people are familiar with this product.
Okay, so
and
we
then
have a little bit of work to do. That's exciting.
Yeah, keep your hands up if you've used the product.
Yeah.
Okay, so
just to reinforce that it's not that complicated, my 80-year-old mother and father love it. They send money to their grandkids send money to them. They're very, very smart individuals, but it reinforces that it's an easy way to make payments, and anybody can do it.
You make the case that all of these companies that I named, we didn't talk about Apple Pay is another one that you work with, that this is all, you essentially, this is all good for Wells Fargo because they have to work with Wells Fargo. In several of these instances, and if maybe only thinking about market capitalization achieved, wouldn't it have been better for Wells Fargo to have invented those products and owned that market?
Well, I think first, it's not necessarily it's better for Wells Fargo. It's better for our customers. Our view is that we want our customers to have their financial relationship with Wells Fargo. If you want to use another payments provider because that's your choice, that's fine as long as you come back to Wells Fargo. Apple Pay is a great example, right? We were one of the first banks that was on Apple Pay. That's a terrific convenience for those folks that have iPhones. Not everybody in the world has an iPhone. If you want to get to your Wells Fargo accounts via your iPhone, that's fine from our perspective. Right? We want to offer our customers convenience as long as ultimately they come home.
Do you have any insight into why Apple Pay is taking so long to gain traction with merchants?
Well, I think that it's primarily one of cost, right? Because they had to change out their machines.
Yeah, but Apple has a lot of money. I would think they would want to pay to help with that.
Maybe they will. That's their decision to make. They're a bunch of very smart people.
Indeed. Last technology question. I as you know, the day I came to visit you in San Francisco, I used the cardless ATM feature for the first time, and it's good. But you have to get a code.
Say it's good one more time.
It's good.
Okay.
And by the way, I like the name Control Tower too.
Yeah.
We learned about a product yesterday from Amazon called Treasure Truck, which I like these catchy names are good. Okay, so I like it, but you have to get a code on your phone. What I'd really like to do is either put my thumbprint on the ATM or do iris biometrics the way they do with Clear at the airport. When's that coming? And if your answer is not soon, why not?
Well, it's probably not going to become soon to the ATMs. Instead, our thought, and I think generally the industry is coming to the same conclusion, is that we want our customers to give our customers choice. So if they have a way that they're comfortable using authentication in a method, and they're more comfortable using their phone, I think it's probably going to come more from the mobile device, more likely than it is going to come from the ATMs. Okay. But there's still a debate going on. Yeah.
Okay, but you're not enthusiastic about it. It's not urgent.
Well, no. Well, no, customer security is urgent.
Okay.
We're spending a lot of time and effort focused on authentication technologies, whether it's through your iris, whether it's facial, whether it's voice and the like. We're rolling out to more of our customers voice recognition just because so many of them do interact with us via phone.
Great. So Tim, Wells Fargo, very old company, as you've already pointed out, had a sterling reputation as sort of the aw shucks achiever out in San Francisco, not one of them fancy New York banks, but also a very aggressive culture of what I've interviewed both your immediate predecessors who'd never missed an opportunity to talk about Wells Fargo's famous upselling of accounts to customers. Then last fall happens, and it turns out your colleagues have been doing some very dishonest things. How did that happen?
Well, I think it happened for a number of reasons. First and foremost, in our retail banking business. So I want to make sure that it's clear that the primary challenges we've had were in our retail banking business. That's a part of the company. I don't mean to diminish it, but the opportunities we have in our wholesale group and our consumer lending group and our wealth and investment management group are just different. But within our retail banking business, we had an incentive plan that drove the wrong behavior for some of our team members, and that was inexcusable. It created problems over a period of time. That's been well reported. We should have and could have moved faster, and we didn't. We've taken responsibility for that. We scrapped the old incentive plan. We've got a new incentive plan that was rolled out to about 100,000 team members in January. The early results are it's working very well. It's very focused on service, advice, growing relationships over time, teamwork, as opposed to selling products. The other challenge that we had is that we were a very siloed organization. Within each of our business lines, we had all of our enterprise and control functions. We had to fundamentally change that. We've moved all those enterprise functions on a centralized basis outside of the business lines, so there's a better check and balance in terms of risk.
Forgive me for not remembering that Wells Fargo has an expression for the number of different accounts that each customer has.
Right.
What's that expression?
Well, we call that our cross-sell ratio.
Cross-sell ratio, you bragged, the higher number was better, 7, 8 was an average for quite a long time.
About 6.
Okay, thank you. And this is like a checking account, a banking account, a credit card, a debit card. Has there been a change in that number since last fall?
Well, I don't know what the number is because we don't look at it that way anymore.
You're not measuring it.
We don't talk about cross-sell anymore. What we do is we focus on good relationship management and building relationships over time by providing the right service and advice to fulfill the vision of the company, which is to satisfy our customers' financial needs.
You certainly have the data on the number of accounts each customer has. You say you're not collecting it or looking at it
That's
anymore.
correct. We're not.
What has been, one of the ironies is that given the macroeconomic climate, the interest rate climate, and the whatever climate you want to ascribe to optimism about the new administration beginning last fall, Wells Fargo's stock is up significantly since this scandal hit. What has been, in your estimation?
I'm sure it's because of the new CEO.
Well,
I was waiting for that. I thought that was going to be the punchline.
I like the
What happened?
I like the toggling from humility to the opposite. It's very effective.
Yeah.
What has been the impact? Has there been a financial impact on the company, and has there been a reputational impact on the company?
Well, there's no question there was a reputational impact on the company, and I'd love to be able to tell you that all the changes that we've made in the company have miraculously allowed us to turn the page in a 9-month period, and that's just not the way it is. It takes a while to, and it's going to take more time for us to rebuild our reputation. We made some big mistakes. We've taken responsibility for those. We've made changes, and we're rebuilding the reputation of a great company. In terms of the economic opportunities for the company, we've been in this slow growth, kind of lower interest rate environment, though in that same period, the last 19 quarters, Wells Fargo has been one of 2 companies in this country that's generated over $5 billion a quarter for our shareholders. The 2 companies, Wells Fargo and Apple.
Has there been a change to the trend line of your number of customers in the retail business since then?
Yeah, absolutely. There's a change in the rate of growth.
Okay, so you have not had decline. You have not had attrition in customers. You've had slower growth in adding customers.
Well, the rate of growth versus attrition has slowed. So there's always churn that occurs in any business, certainly in the banking business. We bottomed in terms of all of our customer metrics, consumer metrics in particular, customer experience, customer loyalty, the growth of primary checking accounts, credit cards, and the like in the 4th quarter, and we're seeing steady growth. We're not back to where I'd like us to get, but given all the changes that we have going on in the company, I'm very confident that we'll achieve our historical growth levels.
Would you generally say that retail banking products are sticky? I haven't done it. I haven't made any changes to my Wells Fargo accounts.
Yeah, I think if you're providing good quality customer service and advice, you're providing convenience, you're providing reliability, then absolutely they're sticky. But if you don't meet customer expectations in any of those, they're not sticky at all. People move with their feet.
I think one question that came up immediately when the scandal sort of hit the front pages and John Stump retired and you were named to replace him, the cynics out there said, this guy Sloan was the president during all this time, or the chief operating officer. Why him? Why not somebody who has no connection with any of this?
Sure. So I was named president and chief operating officer about 10 months before I became CEO. But I've been senior leader of this company for a long period of time. I was CFO, I was CAO, and when I say taking responsibility for not moving as quickly as we should have to deal with some of the mistakes we made, I take responsibility for that. Having said that, the board of directors said, gosh, we're in the midst of a crisis. Do you want somebody that really understands this company, that's demonstrated an ability to lead in a variety of different businesses? They concluded that I was the right person for the job. But I serve at their convenience, and the moment that they decide that that's not be the case, then I'll be doing something else.
Last thing on this, Tim, did Warren Buffett give you any advice when you became CEO?
Yeah, he did.
Warren Buffett is and has been for a very long time a large shareholder in Wells Fargo.
He's our largest shareholder, and in fact, we're Berkshire Hathaway's largest shareholding. We're just so fortunate to have arguably the world's greatest investor as our largest shareholder. And Warren is very good at providing the experiences that he had. And we talked, for example, about when he stepped into Salomon Brothers and had a reputational issue, and then some of the changes that he made, and it was a good guide for me.
What was his advice?
His advice was to move quickly and to ask a lot of the team, and that's what I'm doing.
Your questions, please. Yeah. I see you one over here. The paddle is coming to you. Please tell us who you are.
Nathan Rosenberg from Insigniam. Like Adam, I'm a longtime customer. I'm also a shareholder, and I've also consulted with your company. So
Thank you.
I have an emotional attachment.
And thanks for the disclosures, Nathan.
Yeah,
Yep.
thank you.
My oldest brother, Werner Erhard, and Michael Jensen just wrote a paper called Putting Integrity in Finance that got published in the journal Capitalism and Society. Mm-hmm. Without integrity in financial markets, the markets don't work. Mm-hmm. I actually ran into the buzzsaw, and a young man in the branch opened, I think, 6 accounts, 4 ATM cards. What in the culture, I understand the rewards part of it, but what in the culture allowed for that?
Well, I think that within the retail banking business, the incentive plan drove also a management focus that reinforced the culture of selling products as opposed to fulfilling the vision and providing the right service and advice. So the way to change that first is to scrap the incentive plan, roll out a new incentive plan, but then also reinforce training to branch managers, to district managers, to regional presidents, and so on. And so we're going through that right now to change the culture that was driven inappropriately by the incentive plan.
Up front here, please.
Yeah.
Hi, Marshall Dormeyer. I have a question.
You're not a customer?
I
What do
am
we
a
need?
customer of yours, actually.
Okay, good. I just want to
Thank
check.
you.
Are you a happy
Mostly, but
customer?
I'm a happy customer.
Good,
I
okay.
have a question for you. We're all aware that the money that we have in our accounts with you are numbers in a computer screen someplace.
Right.
We've had a lot of discussions here about cybersecurity.
Mm-hmm.
We're aware that certain healthcare and other industries have been shut down with sufficient cyber attacks.
Yeah.
How does the banking industry approach me, not just authentication of me, but in a sufficient cyber attack, how do we reestablish at some point what money I have with you? What is the proof to unwind after a sufficient cyber attack? And what does that conversation look like?
Yeah, thank you for asking that.
Yeah, so I'm glad you talked about cybersecurity because we view that as one of the biggest risks that our country faces, but also the banking system could face. Because to your point, if we ever had a really big cyber attack, you'd really lose the trust of our customers, and it's a binary risk. So when you look at the $7.1 billion that we spend in technology, which is what we spent last year, we'll probably spend a little bit more this year. A good portion of that is spent in cybersecurity. What we do is we try to make sure that the threat perimeter is as lessened as possible. We make sure that from an access management standpoint that we have the right team members that have access to certain information. We make sure that we're hiring the right folks to attack us every day on our own account. We make sure that we have the right software technology to continue to monitor things on a 24/7 basis. We've got 3 cyber fusion centers all around the world so that we can do that. And then we make sure that we've got the resiliency in terms of your financial information so that if there's a problem on a Wednesday morning, that we can look back to what things looked like the night before on Tuesday and we can rebuild whatever account. So far, we've been fortunate, but we're vigilant every day. I think it's the biggest risk to the financial services industry today.
Tim, last question.
Yeah.
It's been much commented on recently that we're, I think, 9 years into an economic expansion in the United States.
Correct.
What is, and you have a team of economists, what is Wells Fargo's forecast on when that expansion will end?
Well, it's hard to say. I think our economists and our risk folks are generally optimistic about the continuation of a slow but steady growth. Hopefully, we can see the gridlock break in Washington, and we can get some improvement in terms of tax policy and a reduction in regulation in some areas. And I think that would be a net positive, and we think that could add 50 basis points to 100 basis points to the growth rate.
GDP growth rate?
Correct. Sorry.
Tim, thank you very much.
Thank you.
Appreciate
Good to see you, Adam. Thank you.